Well, everyone, hope you can see the charts okay. Got the right chart up. It should be the GBCHF. Doesn't really matter to have that up. Anyway, good morning. If you can't, please let me know. If you can hear me all right. If you say yes, you can. If you say no, how would you know you can hear me? Morning. Good stuff. Thanks, Henry. Yeah. Happy Friday. Well, yeah. If BOJ didn't stuff us around on the Euro-Japanese yen last night. He's not in yet. Is he in? Yeah, fine, he's there. I saw it in the morning update. I think someone's on the ball there because I thought, what the heck was going on here? Yeah. There was a guy in Japan doing something at 1 o'clock in the morning, wherever the time was. Oh, no, it's in India. Oh, my goodness. Oh, dear. What annoys me, guys, there's nothing you can do about it, is why can't you get lucky instead of unlucky? You know what I mean? Why couldn't have said something the opposite? Or go and, if we'd been, pretty sure if we'd been short, he'd said something negative about the yen and it jumped up the other bloody way. Studying Murphy's Law, start getting my nerves a bit, because that you can't control. None of them are still there. Hey, I've called the commentator's curse. That if you follow cricket, there's a match on to New Zealand today on the cricket. And there's a guy called Joe Root, an English batsman, the top guy there, and he's been getting out a couple of times to reverse a sweep. And they said, yeah, good man, he hasn't done this all day, this reverse sweep, very good. Next ball, I am not kidding you, he did the reverse sweep. That's Murphy's Law, that's commentator's curse. It came off this time to get out, to be fair. But the point is, just after that statement, oh no, that won't happen, immediately bloody well does. Yeah. I'm saying, right, I'll tell you right now, I'm not getting negative with you guys. We've done bloody short in that thing. The news will be bad for you, and it's shut up. So I'm still a little bit. It's not fair. It's not fair. It's not a laughing matter, Petru. It's just not fair. And there's nothing wrong with feeling entirely sorry for yourself. I recommend it thoroughly. But yeah, no, it's a bit frustrating. I hate it when a good trade like that gets stuffed up. Anyway, it's past. We can either see the gold that some guys might have modified or not. I don't know. Maybe 1825 got I don't know. Some guys might still be in it, but still trundling along, still in profit. So yeah, good stuff. You're still in. Let it run. I still think you should modify somewhere, just in case we don't get somebody standing up and saying something. Gold suddenly shoots up to 1900, being slightly over the top there in my petulance. But you know what I'm saying. So at least maybe put a break even or $1 in profit or something like that. I don't know. But yeah, it still seems to be holding at 1825 and below or something like that. Okay, so let's see if we can. We're on a 15-minute chart. It's not too bad. Okay. We shouldn't take a small loss on gold. I don't know how you work that one. Into the trading signal, I'm just saying take a loss. Unless you went in late or something, I don't know. Brent, that's going well. Don't tell me you've made a quick loss on Brent, then I will be upset. That really will not make my weekend coming up, because that one you should have done all right. I don't know, suddenly went in at 82.60 and then wonder why they lost. No, you should all be in a nice profit. Now it's too on that one. Let it go. I'm still sticking with that one. Still sticking with it. You did. I was going to say. Well, it shouldn't be a made. It shouldn't be the past tense, Pietro. You should still be in both. But if you're not, well, okay. You should still be in both. Right, on Brent, I'm hoping a lot of guys are still in it. We're a long way from TP. Again, I get this fear, especially I've been knocked with a fundamental coming up. You think, I'll take it off the table. But it comes back the same thing. You're winning maybe 3 out of 4 trades, but you're losing money because your 4th trade, you're holding on to the loss. You take the profits too quick. So rather modify your stop loss. Now, I've mentioned I like about $2. Maybe you can change that a little bit. I mean, if it goes up a bit more to maybe $1, I don't know. Well, play it by ear. But you got 80.50, that's $2. So you can't put it up to break even now if you haven't. You can do it. At least it's got a $2 move between the stop loss, okay, and you're still protected. So I don't think so, no, Tim. I don't think so. I think you're chasing it too much. So I'll tell you why. Sorry, Tim. Welcome, by the way. I don't know if you're new here or not. Don't recognize the name, not the Tim part. that's a common name, but Sondlani, that's put out properly. Not Sons Lane, but Sondlani. I hope I got that right. I just want to compliment you, by the way, because I want everyone to understand this. You've already started off by interacting. Thank you for leading the way. I hope other people pick it up, because too many people don't interact. I don't know what they know or don't know, and as a result, mistakes can come in which really not easy to sort out. But I didn't know there was a problem in the first place. So thanks for that. We need interaction. Brilliant. In fact, I can't do this job without it. Okay. So no, I'll tell you why. I still want the stop not at 80.50 anymore. I prefer a $4 stop. I still want the stop down here. If you're going to enter now, you can modify closer afterwards, but for entry, you need a proper stop. Now, if you go in now and you put the stop down there, it's just over call it $5, right? So you've got to look about at least about $8 of potential profit. If you're going to go at $8 from here, sorry, you're aiming up to here. Is that going to come? I'm not so sure it will. You've got to remember the producers as well. The producers want to make a profit, but they don't want to bust the customer. So it goes too high, they can actually, especially Saudi, they can start opening the taps. If it goes too low, they can control it because we don't want to bust the customer. We don't want to give them too much of a bargain, so they can start closing the taps, not tightly, easing off on the taps, for want of a better word. So I'm not sure unless a bomb goes off or something drastic like invasion Ukraine, or a bomb goes off in, let's say, the Straits of Hormuz at the entrance of the Persian Gulf. That's a complete out of control. That's like yesterday's BOJ guy. That's completely outside of control. That would shift it up to $100, no problem there. Outside that, you can't bet on that. I'm not sure we're going to see 90 again. I think it's going to roll around about the range it's been seen so far, 80 to maybe 88, something like that. So you would not get a risk reward going in now. That's my main reason. Obviously, I expect more upside. I'll say everyone get out of the bloody thing. So clearly, I expect more upside for the guys on board. But your target's in Durban, you're in Joburg, your stop loss in Pretoria. That's fine. But you don't want to be joining in Heidelberg. For those who don't live in this part of the world, it's between Durban and Joburg. You don't be joining in Heidelberg with your TP in Durban, your stop loss in Pretoria, and we're making it closer in the range. So not to chase it now. Try and get, I know it's very, very different emotionally. Try and not get your stop too close. No problem modifying it, but try not to. If you're still in a profit, your stop it to protect you. Try to get out too quickly. If it'd been maybe 30 pips away by sheer bad luck, we actually mentioned the Euro JPY yesterday afternoon, then I've said move your stop up to just above entry. Everyone had broken even, covered costs, maybe around a 2 on the top of it. But it was a bit close. We said, well, wait a bit. I'll be honest, I did not know he's going to do that. In fact, without Fania, I would have already found out this morning. So thank you, Fania. Now I could actually mention our strategy wrong this morning, make me sound really, really knowledgeable, know what I'm talking about, keep my finger on the pulse. Meanwhile, back at the ranch, certain Mr. Murray helped me out on that, and thank you very much, sir. But just being honest with you guys,
But yeah. We are a team, sir.
We're a team, exactly.
A trading team.
We are exactly, well, we're trading Marines, sir. Trading team doesn't cut it anymore. We are the trading Marines. Absolutely. Yeah. So back on Brent. No, that ship sailed. Try not to get out too quickly next time again. Rather protect yourself. So you get John Smith saying, "Should I close now?" It might be very, very rare case. It's probably not a bad idea. It's just coming up with CPI release. It's really up against resistance. You could go wrong. Most of the times, I'll say modify your stop. That's covering my ass, because the last thing I'll do is get out of it. Happens actually, Mark's not here when on Netflix, although it's like to come off, and it's not a bad idea. The thing went up, and so you didn't blame me. I blame myself. I shouldn't have said that. What I should have said, modify your stop. You'd rather do that. At least all right. You might be slightly less profit, but at least you will make a profit on it if you get it better than the actual market entry. Okay, fair enough. Moving on. Gold, yeah, we mentioned gold just now. The next one came out. We had a few out, and the last one came out was yesterday. I think it was yesterday. 1832, I think was the entry. That's $10 away, so that's good enough. So you can put it to you can put it to 1830. We're on gold now. We'll put on the 4 hour. See, yes, since the trade's been out, been hovering below that. So you put it 1830, you covered your costs. You won't make much on it, but at least you're not going to lose on it. And then see if we can break 1820. Don't forget to keep an eye on the DXY. Don't forget keeping an eye on the yields. I'm assuming you've all got them, but I assume a lot of things, and people don't say I haven't got them. So whether you got them or not, I'm going to just give them to you now. That's the economic calendar. No, sorry, that's the DXY, the dollar index, and the economic calendar. Do that quickly. Second.
Jim, may I ask something, please?
Sure, yeah, of course.
Sorry, I was speaking to Dirk for a while. I heard you talking about Brent. Did you say we should modify the stop loss of Brent?
I did indeed. Just 1 second, Anne-Marie. I did do a typo here. Right. If you haven't got them, keep an eye on them because generally they work. I'll explain this now. You can. You should have got in. I can only go by the signal entry. I don't got in.
Yeah,
if you
I went in. Oh, yes, I went in with a signal entry.
Okay, so about 1850, fine. Yeah, you can put your stop up to maybe just above break even to cover costs. I like to keep it normally $2, but I could change my mind on that. Going to play it by ear. If we're getting slightly higher, maybe put it at $1.50 or something. But if you're going to run about 80.50.
80.50.
That's perfect. Well, spot on. That's great. Put it 82.70. Then you cover
82.70. Okay, thank you.
And then you're okay. And then you can relax. You're not panicking to take profit. You know what I mean? It's going to go up and down. It comes down a bit. You start panicking, getting out, and it goes to T3. You're not on board, and you made $2. I get that per barrel profit. The next time it goes against you, like the FTSE, you lose $10 per barrel. That's a FTSE, I'm just saying, because that's $4. And the problem is now, like I mentioned, you've got to understand this. You lose 3 trades. You've got to win with that kind of emotional strategy. You've got to make 10 trade winners to pay for it. And that's the wrong way around. You know what I'm saying? So I know you're on board with that now. And it's without doubt the most disciplined area for anyone starting. I hate to say this, mate, even more experienced. We're all human. And sometimes we all say, stop this. I've done it quite a few times. Not as many as I used to. I've still done it quite a few times the last few months where I've kicked myself. I've had the protection, the stop loss. It was in profit. And I got nervous and I took it. The bloody thing started coming off. I had it turn. It went shooting up and I wasn't on board. So it is.
Thank you, Roger. Thank you.
Okay. Could be Nico, could be Nico. A lot's dependent again on the yields, which come off a little bit, I grant you, but the dollar's still maintaining first strength. And you know, they're inversely proportional to gold movements. And every time the dollar's coming off, it's trying to move back up again. And it's attacked 1820 a couple of times, but it's still hovering around the 1825, 26, 1819 area. So you're protected now if you move your stop, whatever happens, and maybe you can get it down a little bit further. I'm not sure we get 1800 this time around. I mean, to be fair, that's the TP to get the risk reward. I'll be honest with you anyway. Yeah, what I say. But it could do. If the dollar keeps going up, yields going, maybe something happens at PCE this afternoon at 3:30 on the US. Personal consumption expenditure comes up later on. That could stuff the system up. That's out of my control, like India and Japan, the G20 yesterday. But I'm not sure it's going to reach 1800 this time. Might be a bit slow. If you can break down 1810 and it's hovering, starting to move up, maybe we can think about taking it or maybe move your stop or something. But I still think if you're protected, why not even get a bit more out of it? If you see the dollar coming off quite a lot or any problem with that, fair enough. Now, on that subject, make sure that before 3:30, make sure, and Brent and gold, is stop loss protecting. Some of you go radical. As we've all known the hard way on the fundamental, the last you do is those lovely profits whisk away and you stop down the loss. That completely sort of demoralize you. You get my point. 1818 is good enough, Morris. Okay, good enough. Right. GBP, CHF. Seems to be doing its little up and down dance on the 4 hour. Seems to be hovering like there. Just doesn't seem to be getting going. Look at that. So just stick with it. It's about break even now. Came in nicely, profit there on. Some players might get in a situation where in profit, then maybe come back down to test the round figure again, might get fed up with it and take it. I'll be honest with you, I don't blame them. If it does break through and you could have been on board going down another 100 pips, I still won't blame you. You're probably by now fairly fed up with this thing. Because I'm so sure as hell am. Pound is weak, never mind what happened the other day, it's still weak. Swiss franc is an area where I like Singapore, Dubai, Luxembourg, Liechtenstein, maybe Saudi to a certain extent, would I say, pretty good economies. Sure. They haven't got massive welfare state expenses, which is crucifying, quite honestly. So why it's still hovering there, I don't know. Maybe it's some sort of emotional lack of interest from the sellers, really. But stick with it. But if it does get a profit and you get fed up and get impatient with it, this time I won't blame you taking the bloody thing. Just to reset 3 margins, say fed up. But don't cry too loud. If it does at last break down the next time, it shoots off down here and gets the teeth in. Okay. Yeah. So there you are. If you really want to be successful in this business, and I'm the man to come to because I've just got the course to sell, and a special price for you, one time only. Special price for you. It's a course on trading psychology. Obviously, I'm kidding about selling it, but I'm trying to make a joke out of making a very valid point. Learning the bits and pieces in trading is certainly not degree level intelligence. It's average intelligence can do it. Where you need degree level above intelligence is working on that character, discipline, that patience, and all the emotional stuff that happens with the person. That's really, unfortunately, where it's at. That's why you learn nothing on the demo. If you take the emotion out of it, you're not learning. That's where it is. I make a joke out of it, but that's one of the reasons, looking back in my trading life, most of my failings in trade wasn't the trade or my skill or my understanding, it's my emotional took over. So try and just bear in mind, it's a devastating thing called fear, and it controls us all. What did Roosevelt say after bombing of Pearl Harbor? We have nothing to fear, but it's in church. We have nothing to fear but fear itself. Easier said than done. Good stuff, Morris. I like to hear these comments. I like to hear them. You can't hide. You've got to have the good with the bad. You can't say, well, I'm not going to put a bad one up. Then we're living in fool's paradise. So it's nice to have when we hear that as well. Well done. Right. So next question is Tim or Nico or some of Dirk might turn around. Dirk, that is not Thunderberg. Might turn around and say, well, hang on, should you buy or sell it now? In my opinion, that's exactly in halfway house. And look at that candle. See what it's doing? Indecision. If you buy it here, you put the stop here, you've got a, sorry. If you buy it here, you got to stop down here, 85 pips. You aim there, ain't going to cut it. You aim there, yeah, you could, I suppose. You could do if you aim there. But maybe you could. But I wouldn't. I'd say, you've got it, but I wouldn't get chasing it now. No, sorry, Tim. Don't take this the wrong way, mate. But you think you're unique in that. I'm sorry, mate. You are not. That is without doubt the biggest problem, the impatience. We like this because it moves. Why do you buy that Ferrari? To be stuck in traffic doing it 10Ks? No. So that's why you bought it. You want it to bloody move. And that's why you're stuck in traffic. And you're in a Ferrari, used to being free and brave with, like a cabriolet with the roof down and hair blowing in the breeze, doing 180, which you shouldn't be doing, on the open road in the Karoo. Suddenly you're stuck in traffic. Of course, you can get impatient. It's one of those things. So, yeah. There you are, Petro. Yeah. And what we do then, we start looking for trades. We'll put a fib in. No, that doesn't work. Put a trend line in. That doesn't work. We'll put a Bollinger Band. That Bollinger Band definitely give me a buy order. I'm buying it. You know what I mean? We move it around stuff. It's quite normal to fit in our own narrative. How many times you watch a TV program or read a book? That's bloody brilliant. Till they say something you disagree with. What a load of rubbish that is. Let's switch channels. Throw this book out the window. You know what I mean? Yeah, Maris again made quite a good point there. I just want to develop what you just said there. There's no trading session 7, number 1. Number 2, because the guy said they're not sending out a trade today, I'm going to give a real read. Well, I'm going to give a real, but please don't tell anyone it's recorded. You know, the guys who does it's actually got a day off today. Shouldn't really tell you it's gone to play golf. Okay, I know, so it won't be sent out. But Friday, picked for reasons we don't normally send out going to the weekend. If we find one in the training room, we can do it. But if the guys are not in the training room, won't get that. We won't send it out. The beauty is hopefully that send out people come to the training. They might learn something, hopefully. But anyway, so if we get one out here, that's different. Having said that, I'm not sure we will get one or two anyway. You might find one. I haven't found one this morning. So going back to the point, we can look at a couple of shares. So I agree with that. It's one embroider a bit, so we're on the same page. Okay, have I still got it on there? I think I took it off. I'm sure I did. Tap here, see my cursor is, and you get it tap there, and you have that little triangle pointing up and that an alphabetical order. Makes it easier. Okay. So trying to faff around. I shouldn't really admit this. Can't find out the way to do that on the phone. So I'm going to the office today after this session, and there's a couple of buddy nerds in there might be able to help me out. I'm finding out how to get alphabetical order on the phone. But that doesn't mean it can't be done, because my tech knowledge, well, put it this way, going to make me chairman of the board of the tech department anytime soon. Right, right, yeah. But that's between you and what I said about the golf. Okay. It's easy. What stays in the trade room, like Vegas stays in. Don't drop me in it. But we wouldn't. Don't worry about it. Probably wouldn't send out any on fire. We usually don't. But the training will get them. What am I doing? So, sorry. We can certainly look at that. What do you want to do with this, Marius? Put it on a week, not see much there. What do you want to do with this? You look at it yesterday, I get that. We can see the price what happened yesterday. Remember, most of the market came off. This went up 33, we'll call it 15%. Right, Marius and guys, the market comes off and this jumps up. Not 2 or 3, 15%. What does that immediately tell you? What does that immediately tell you? No, please say it went up a lot. That clearly see. But why do you think it jumped up a lot? What does that immediately tell you that what happened?
There was a fundi.
Thank you. Go for it.
Sorry, there was a fundamental that the profits are extremely high and they want to supply to somebody or busy with some, I don't know, I haven't read the total article. Maybe Marius is more on the ball on that one than I am.
I see you started your club because Marius mentioned it. Now you seem to know a bit about it. So I'm thinking you had a quick research. Okay, your little group there starting to produce fruit, good stuff. I'm being like, oh, honestly, I shouldn't admit this. Well, it's good. You laugh, but it's good because it helps me. I mean, I don't know what's happening in India. I didn't know I should do, maybe, but I didn't. And I didn't. I'm not even on the watch list. So now I can look regally knowledgeable to other guys now and again in the office. Meanwhile, it's the trading room subgroup, if that's the right word, it fed me in. So that's good. So I joke and tease because that's fun banter, like a team does to each other, part of the fun. But the point is, it actually practical use comes out of it. But thank you very much. Now the big question is, now I'm throwing it back in your scene there. Clearly, I didn't know what the fundamental was. They did. Thank you very much. Now I do. But the first thing you say when I see that is funding. Quite right. You jump like that. It's nothing to do with double top, double bottoms, bearing gulf, bullish engulfing candle, or jumping through the 200. Squat to do with it. That is a fundamentals come out of the company. And now we know that the actual details of that fundamental. And thank you. All right. Now the big question is, do we chase it now? Do you not think that when it opens, there'll be some more movement up? It might open up a bit higher because the guys who missed it will want to get in. So when it opens up, let's say it opens up at 240. Now we're nearly 20% above what it happened on that movement yesterday. Don't you think as more guys quickly jump in, you might get a higher price to get in, and some of the big boys will be happy with that. 20% profit on a leverage, on a 10-to-1 leverage, that's 200. On 100-to-1 leverage, there's not enough north, so you get it point. Would have made massive profits on it. That's a 20-to-1 leverage, sorry. So 20-to-1 leverage on this, and 20% is a 400% profit on your margin. So a lot of guys will rather understandably forget everything I've said about running your profits. They'll say, it's not that, I'm out of here. What a pleasure. And they will take it. What do you do when you get out on a long? You sell. What happens to the share price? Enough people do it, it pulls back. So depending how it opens, might consolidate a little bit. It might pull back a bit and then you can look at it. But unfortunately, I hear what you're saying, but once the news is out, it's normally too late. If you knew what the CPI is on the US beforehand, you do your thing. But afterwards, it's released. It's already been reacted to. So I can't say chase it. We don't know what's going to open at. But if it pulls back, fair enough. But it might pull back a bit and be helped by a bit of a bounce on the indices later on today after coming off so much in the last few days. And that might add some momentum further move up. So you've got to look into all I've just said there before you jump in. What I'm saying in a nutshell, fear of missing out, try and control that. Ooh, that's jumped up. Let's get a part of the party. It's like buying Bitcoin 100 grand. That's too late, mate. That's when you should start thinking of selling it. Same point. Okay, I hope you're with me. Oh yeah, well done. You've given the information. Good stuff. Most stuff you find investing.com. It's by far the turn to for all investors, traders, you name it. It's bewildering the amount of stuff they go on there. You want to find what's happened to Bitcoin, you want to find out to the Rand, you want to find out what's Discovery. It's all on there, you know. Never mind bloody Apple. You get the idea. Yeah, it's load shedding. I had off from 4 to 8:30 this morning and 12 to 4:30 this afternoon. Well, be not serious. Actually, it's still not a problem, actually, because at least you have an inverter. But that's the problem. A lot of our clients just haven't got the capital for an inverter. And they say, we'll give you a reduction on solar panels. Sounds great, isn't it? Good idea. How many people can afford that in the first place? Discount or no bloody discount. Yeah. It's like trying to sell fast cars and guys looking for a job. Yeah? Okay, so NVIDIA, yeah, that's my take. I'm not saying you're wrong to buy it, wait for it opens, might get a better price, etc. But just forget that's had a 15% move up. Will it be sustained? It might be on guys who haven't got it yet, but watch it. Other guys might be taking profit there. Well, I don't know. I'm just throwing that out to you. Okay, look at something else. We're not doing too bad on it. I don't think anybody's still in the other shares. There's no point going through Bubba if everyone's out, but it's done okay. It's in profit. I'm assuming, I don't know if you're still in there, Fania, or anybody else. Not much you can do about it now, but talk about shares. Got in, I think it was it 102 or whatever it was. So it's clearly a profit. Clearly, you should have modified your stock. In theory, you should still be in it with a modified stock. If you're out, well, fair enough. The other one was Meta. I think finally somebody else joined him yesterday for a new trade. Came off nicely to 171 and it bounced again. So you should be around about the break even, but it was in profit. Maybe next time around to start picking up. It's not a panic yet. Microsoft jumped a little bit, became, I think, broke 250 at one stage. Not quite nicely, but nicely still in the profit. Got in 264, might come off a bit more. You should still be in it. If you're not, well, don't join it now. And some people, again, I hope they wouldn't have tried to suggest they don't take profit on Hewlett, and don't see why. Went off nicely, jumped up a bit, get down to just try to break through 29. Might come back off again. I still think let it run, and just hope your stock provides modified stock will hold. You don't get stopped out, but you're protected. But they're in profit. That's the main thing. I don't think you have anything else to chase now. But if you do get a bit of a jump out of these guys, I still say sell the rally, get a better price, sell it down again. We're not anywhere near out of the problem we got worldwide. We're nowhere near the bottom. We haven't had a decent pullback yet on any of them. Sell the rally the way forward. I didn't think of that, Nico. It's quite a valid point, actually. And remember, we're all emotional. And if it gets sexy like Bitcoin, it gets bid up way above its actual value. So in other words, the value of a house is $1 million, but everyone perceives where you live as a sexy area, they start moving in, and you start putting the price of the house up to 11 says it's overpriced and it comes off. So that's what happens. So I didn't know that, so somebody else. So you could actually get more of it, yeah. Because we know Ethereum and all the rest of the cryptos, but Bitcoin is still the man street's heard of it. And the man street's heard of it, becomes sexy and they want to do it. That's why guys do the NASDAQ, well, can now, but before the micro, on Peanuts accounts, because they see all on Instagram and all these other things about these guys putting up their demo accounts, which they only look the winners. They don't want to post the losers ones on there. They get excited to make a quick buck, but they don't want to put any money in to do it. They put little money in, overexpose, and wonder why it goes wrong. Just be careful, Instagram guys. If you like, it's good fun, but be careful. Anything you see on there as regards screenshots, it's clearly you're not going to put down in Facebook, Instagram, you're in a terrible time on holiday and your wife divorced you. You know what I mean? You can say, what a wonderful, this is me in the Say Show. What a wonderful time I'm having, even though you're having a fat argument or it's pouring your eight. You know what I mean? So just be careful of those screenshots. You know what I mean? And so you got to say, either you're not making that much money on it. Why are they bothering putting it on there unless they're showing off? You know, just be careful. A lot of it's actually demo accounts anyway. I know they do that on YouTube a lot. And they pick it, they're showing how the FIB works. Well, they picked an area that had worked on the demo anyway. Be careful. We try to work in here what's going to happen. I can show you, hey, I bought here, look at the amount of money I made up there. Yeah. Right, let's do it again then. Oh, well, hang on. See what I mean? No, it's going against it. Go for it.
Roger, I'm sorry. Did you, maybe I misunderstood you. Did you say we should modify stop loss for Brent later today or?
Oh, now.
I did it now and I've just read stop loss. Is it possible to go in again now at this stage?
No. Where do you put your stop? You put your stop at 80.50. 80.50.
Yeah.
Is down here.
Yeah, that I don't know what I did. I think finger problem. I put it on 82.50 and then it went down.
No.
Yes, it happens.
Oh no.
So now I can't do anything, eh?
Oh no, you can't. I'm sorry, Anna Marie.
Oh, it's not your problem, it's mine. Thank you.
No, it's not. It's disappointing. I care. You know what I mean? You got smacked in that. Why can you put the stop loss the wrong place in FTSE and then you didn't make a 50 rand loss? You know what I mean? Why has it got to be in the wrong place in the winner? Sodding Murphy's Law. I'm sick and tired of it. Sick and tired of bloody Murphy. Oh, I'm sorry about that, guys. Yeah. You got stopped out. You put it clearly. It should have been 82.70. As a matter of fact, you should have made it 82.70. Then you wouldn't be able to enter the stop because you can't let the stop at actually that price anyway because it wouldn't have let you. And then you'd have still been in. Oh, what a pity. You can't chase it now. Then Tommy, let GBP leave it alone. It's worry about it going up and down is going to drive you quickly to the loony bin. Just any money you make, you have to pay the psychologist. Let the thing do its thing. It's running up now. See the hole there on the daily. It might come off. If it doesn't, you got your stop. I have no idea what the hell that thing's doing. Let the bloody thing run. You get stopped out, fine. If you don't, well, it makes profit good. Why it's doing that, I haven't a cooking clue. Makes no sense fundamentally or anything. All I can put it down is some emotional retail buyers collectively decided they want to buy the pound. They like cricket. They like what Harry, what's his name doing? Harry Brook is doing with the cricket. They like Ben Stokes, and they like the English, so they're not buying the pound. I don't know. I'm being a bit ridiculous, but that's no rational doing that. Well, I can, Tom, but I'll throw it back at you. Why do you think I suggest she doesn't enter? If you're not sure, I'll ask somebody else. Why do you think I don't suggest you enter? Don't just say because the ship has sailed. Why do you think, apart from that, I don't think you should go back into Brent? Anyone like to answer Tom before me? As I explained it earlier on, I want to make sure they understood the explanation. So some might rattle away quite quickly because I've done it before. Any other guys are not following me. Don't do a fun read, no. Anybody know why I suggest you shouldn't go into the break again right now?
All right, let me try. Tombi, the reason is that we cannot get the risk reward on it right now. If you want the proper risk reward and to make sure that you're at least $5 down the current price, then the price will go up on your TP at about 89.90. And the feeling is that is too expensive for the current economical situation.
Did you get that? Did you get that, Tombi? Did you get that? Do you understand now? Best way to explain it, Tombi, is do you live in Joburg? Well, if you don't, I'm assuming you do. I'll tell you what, I'm going to give you 500 Rand cash to go from Joburg to Bloemfontein to pick up a package for me. And then when you come back with a package, I'll give you 500. Your answer to that is absolutely no. Why is that? Because it's going to cost you more to go to petrol to go to Bloem and back to pick up the package. It's not worth it. You get the 500. I'm not saying you won't get the 500, but it's cost you £1,000 to get it. It's not worth it. You understand? Okay, good. Thank you, Fani, and of course, Petra. Got to get this name pronounced properly here. As long as you understand that, and it goes up, and then Rod said not to get in there, but there's a reason why. Yeah, I think you will. If I do, it's going to go up. But say, what the hell? You stay in there, get out of it, take your profit. Yeah, I think it will go up, but will it go up enough to justify the risk at this level? I don't think so. If you put a tighter stop, you can. It's in the range. And then the stop's too tight, comes back, stops you out, you make a nice little loss, and it goes on back up again. No. The only way I say you could do it would maybe make it a tighter stop, maybe $3, maybe down to around about this level here. You could do it. The problem is you got some problems already on the daily coming up here at 83.50. I expect a bit of a pullback here. If it pulls back a lot, you might want to take profit. Never mind your TP up there. That's your choice. But I expect that's going to be a bit of a hurdle. It's a high probability that's going to be a hurdle. Now, you got a $3 stop. That's not even $1 away. You get my point. And it might come all the way back. Now you're fed up. Then if it breaks through, we got this guy to get through. Then we got this guy to get through before it goes further up. Yeah, put up different TPs and different setups. That's fair enough. I can only refer to the one we had on the signal. You see, you've got to think on your feet and understand the basic mathematics. Because I'm sorry, Gerard, you know one of my bits on this, and it worries me a lot in this country, is the standard of arithmetic, not mathematics. It's very low indeed. And I think some of the reasons, because I had a few minutes to come on about it, and chats on 702, is a lot of the teachers are not that educated. If your teachers doesn't know, how the hell do you expect your pupils to learn? But I listened to the 702, and you got this 10 to 30-year-old whiz quiz for the youngsters, and they're clever guys. They'll know, for instance, Ghana's not in Europe, but they'll say, what's a third of 45? This morning, didn't know. What's a third of 39? They didn't know. So, you know what I mean? These things, unfortunately, are important. I don't expect you have to be pure maths, you know, not necessary unless you're in engineering or something. But if you can't do, you know, what a third of, or moving a decimal point, what it means, basic percentages, basic arithmetic, it's going to come up and bite. It's like not being able to read or write, or not having internet, or not knowing how to what an email is. You have to have these things, unfortunately, are prerequisites to be employable. And it's astounding. I mean, 45, what's a third? What's 33% of 45? I mean, perhaps I can do it immediately, but I mean, even not immediately, comes out with some things. One guy came out with a, not today, but another day, with a figure that was impossible. In other words, what's a quarter of, let's say, I don't know, 60? And the client came up with something like 75. I can never call them. The figure is above the original level. So it means at that level, and these are not daft, they're not idiots. These are clever little kids who want to become doctors, engineers, and dentists. So it's the mathematical or arithmetical area is causing a lot of problems, not fully getting it. You all know what I mean when I'm going on about this is the incorrect margin. Let's just do this an example. If you want to put a trade up, I'll stop immediately. Trying to get this education across, because it's unfortunately one of the major reasons is not getting these volumes right. Guys going in 0.01 on the gold and 0.01 on the Dow. How can that be? The Dow is 34,000, gold's 1,800. It's a radical difference in numbers. I can get this concept, and I find it a bit of a worry actually. Now we've got the micro here. Now let's go to the micro, and you go to your specifications. Highlight it, right click, specification. Right, that says 1. Does anybody not know what that means? This is very important. If I can just explain, because it's not explaining the class, I'm bloody sure of it. Because I know I'm going to leave that out and say anymore. But you've got to know, in the trading room, you want to do something else and move along, I will. But it's worrying me this. So if you don't know, here's your chance. Contract size in 1. What does that mean? If you know, finally, Anna Marie, which I'm pretty damn sure you do, or Marius, just leave this. I'm trying to get other guys, I'm not sure, because this is important. Before we go to that, I'm not sure about that, Dirk. I can get the TP if I put it 10 pips away. To do that with the gold app, the set target's about $2-3 away. Well, hang on, they call it a nice winning trade. You know? I've seen put $5 stops, $3 targets, and they come out. Ooh, look at this! I'm doing well. No, so yes or no. Anyway, well done, you took it. Get my point. Anybody there? Please tell me right now. 1, what's that mean? It's important compared to this one here. The other NASDAQ. This is a nano one. This is the micro one they like to call it, and the other one. One contract. Sorry, the contract size is 10. Clearly, 10 being the one. That's obvious. But I mean, what does that mean? Going back to, let's go back to this one here. What does that mean? What is that telling you? There's no point knowing how to get information that's meaningless to you. Please, anybody out there not know what the hell that means?
What does it mean, sir?
Okay, thanks, Tim. You're a star. Marius, yeah. Marius getting a clue of this, but he's putting the work in. Your little group is going to actually subgroup, group A, group B, whatever. I think it's going to help us all quite a bit, because you're obviously intelligent guys, members, throw ideas around and we will learn from it. So that's good. Right. Contract size is 1 on that. So that means 1.0. You know, you have a lot as 1.0, it's a standard lot, and you have the mini, which is 0.1 or 10% of 1. Or you get 0.01, which is 1% of 1. So micro is 0.01, a mini is 0.1, and the standard is 1.0. So instead of getting 0.01, it takes all day to say, I'll say micro, mini, and standard. One standard lot, or 1.0, is this figure here, ignore the 8, this figure here in American dollars. And that we call your exposure. What do I mean by that? Sorry, guys, but you know this. I've got to get this across, because guys are going to class, they're buying calls and not getting this, and this has to be got. Right. Exposure means you just bought a car for 100,000 Rand. That's your exposure. That's what you're responsible for. Just because you didn't pay cash for it, because you didn't have it, you put a deposit down. But just because, let's say, you put a 10% deposit down. So you're only putting 20 grand down, but you're still responsible for the balance of that 200 Rand car. That's your 200 Rand car. That's your exposure. So that's not deposit, that's your exposure. So $12,000 on this one. On the other, it says contract 10. So the exposure for one standard lot is not $12,000. We'll call it 12 grand, okay, it's easier. On that one, it'll be 120,000 US dollars, 10 times as much as that figure in dollars. So now we're going to put that into Rand. It's roughly, not exactly, 200,000 Rand. So a standard lot in our currency is 200,000 Rand. So you go to 1.0, you therefore have an exposure of, I just said 2 million Rand, is that right? 120,000, no, we'll stick to the micro, yeah, we'll stick to the micro. What's that, 200,000 Rand, 12,000, yeah, 200,000 Rand. So exposure on the micro one, not the other one, that's 2 million on the other one. It's the price of the car on the other one is 2 million. The price of this car is 200 grand, right? So the exposure on the standard lot is 200,000 Rand. and then you put your deposit down, okay, to buy it. That's called your margin. Now you go for a mini, right? A mini is a tenth of that. So your exposure on a mini for 1.0 is clearly $1,200, which is 20,000 Rand. You go in for one micro, it's $121 is the exposure. Again, your put it into Rand is 2,000 Rand. So you go in to 0.01 on a micro here, your exposure is 2,000 Rand, right? So what do? You put a deposit down. Are you all with me so far? The price of a micro is 2,000 Rand. You got to put a deposit down. What is the deposit? This is the deposit, 0.0024 in this case. Okay. Now, if you divide 2,000 by 0.024, you get about 5 Rand, not 50 Rand, which is actually the deposit you get. So this figure is actually wrong. And I've told them again yesterday, as I said, I didn't tell them today because they're off doing stuff. And I told them last week, please get this sorted, because I'm telling the guys in the trade room, go to the specifications, they can see what the margin is, and they can work out the leverage. If you divide the deposit margin into the 100, you get the leverage. 100 grand motor car, 10 grand deposit, 10 grand to 100 is clearly, grand is clearly 10 to 1. So your leverage is 10 to 1. On shares, it's a 5% margin, 5 into 100 is 20. So your leverage is 20 to 1. So if you divide this into 100, you get a margin of 5 Rand deposit. Well, clearly it isn't, it's 50. So the margin on that should be 0.024. Okay, not 0.0024. And I'm certain a lot of people still not understand this, and that's basic arithmetic. Maybe I explained it wrong correctly or too quickly, or because they just haven't looked at it and didn't realize. But I hope you get this. It's basic arithmetic. It's not splitting the atom. It's not astrophysics. Basic arithmetic. So that's incorrect. I'm trying to get them to sort it out. You understand? Yes, you get it. It's correct on the other one. It's correct on the other one, but they forgot to take the naught out. And the other thing is they put it only, I think, on 500 to 1 leverage. Again, I'm sure they're not getting the maths in the office. Don't tell me what it is. And I said, because it doesn't make any difference. Because the leverage on this is actually 40 to 1, 40 to 1 on the micro. So why not have an 100 to 1 account? Still way below. There's no market maker's risk involved here. And I think it looked at me a bit blankly. They didn't want to admit they didn't know. I'm sure they didn't understand the maths. It's a problem. Because they, why haven't 5 to 1? It's irrelevant. Not to do it 5 to 1 leverage. Not do 100 to 1 leverage. It's actually 40 to 1 leverage. Are we all understanding that? It's important. And now you know leverage. You can look at exposure. If there's 100,000 exposure or 1 exposure, it's different. So you don't go 0.01 on a share because it's wasting your sodding time. You go 1 or 1.5 or 4 or whatever. The guys are going something like Ford, 0.01. Are you with me? Let's give an example on a share so we can take some time to get this. Because it's frustrating me because it's so important. And you're not learning all about Bollinger Bands, you don't know the maths about this. EF, sorry, get this right. EF, I haven't got it on there. Of course, had that glitch the other day, you got taken off. F stop. All right. We had guys, because obviously didn't understand, didn't do the maths right, going 0.01 on Ford. Right. We're going to go and buy Ford right now. Right, I'm going to go buy Ford. Excuse me. Where should put the stop? Put it down here. Right? You're going to put the stop down here. Then by the TP. Make it my life easier. Make it 50 cents stop. Make it 40 cents stop. No, make it 50 cents stop. There we go. You're going to put the stop at 50 cents, right? So what is your risk? 50 cents a share. So if you buy 1.0 of Ford, your risk is 50 American cents, which is about 9 Rand. You go 0.01, now it becomes, your risk is 9 cents. So it's somebody complaining that the price of Ford was moving, but a profit loss wasn't. Because the minimum amount it can move is 1 cent. And a cent movement on here is less than a 0.01 cent movement on the account. That's why I hadn't moved. So you go 0.01 on a 50 cent stop. The correct place to put the stop, by the way, is here, which is, we'll do it properly, is about 35 cents. So 1.0 is 35 cents risk, 3.5 cents risk. This is dollars, sorry, by the way. 3.5 cents risk, or 0.3 cents risk of dollar. You get it? So that's about 60 cents. 60 US cents would be a risk. You get my point. Okay, thanks, Morris. See, you three really got your club going. Hey, you don't let the grass grow under your feet. Brilliant. Are you with me? So get the maths right. How do we know that? We go here and say, right, what are the specifications? It's 1. So, you know, if you buy 1.0, you know, you're buying 1 sodding share, and all you're doing is putting 5% deposit. So you put 1 down there, your exposure is $12 American, and your deposit is 5% of that. What that 5% of that is 60 cents. Yeah, is that right? Yeah, 60 American cents deposit per share. That's when you start looking at getting 5, 6, 10, 20, 50, 60. And then the next time they go and they say, I can't put my order in. Why won't it work? So they did a couple of shares and they put 2.0 in, and they got a $2,000 account on a Forex pair without realizing that that's impossible, because a 2 is that contract size 100,000 on Forex, $100,000. So that's about 3.6 million rand exposure, 2.0. Here it's a $24 exposure, 2.0. Slight difference. Are we getting somewhere? Do you get that, Tim? Are we getting somewhere here?
Yes, sir, because I wanted to understand the contract size and also to be able to calculate the risk. So you kind of made it easier for me.
Yeah. Well, the trouble is we've got what we call the cheat machine makes it easy for you. Yeah, we're going to buy this now. It's the wrong one. We can't do shares on here because it's the Forex and indices and commodities trade. So we'll do one anyway. We'll find one in that. We'll do NASDAQ, okay? Right, do NASDAQ and do it for you. You say, because it's done it for you, nobody understands what's happening behind the scenes, you know what I mean? Jump over that cliff. I'm the general, you jump over. Why? Don't ask to do it. It's nice to know why you're doing it. So here you put in the stop loss TP and it'll give you a risk per micro anyway, takes it out. But if you want to be professional, you want to know why you're doing it. You work for a company called ABC, right, guys? And I come on and I meet you in a pub and chit-chatting over sport, whatever. Oh, you work for ABC? Yeah, what you do? I don't know. Who's your director? I don't know. What's his purpose and business? Oh, I have no idea. But they're paid me, I work for them. Well, all right, at least you're getting paid. I get you due. But you know what I mean? I'm going to think the funny fellow, this chap I'm talking to. Get my point. Okay, good enough. So at least now you understand. I hope everyone got that, because it's so important. That's why I look at gold. Gold contract size is 10. Sorry to go on about it, guys. I know most you know, just in case. 10. What is gold? $1,800. 10 times 1,800 is a hell of a lot less than Dow, which is, where is it now? There's a Dow, yep. Specification 10, right? But that the Dow is $33,000. Slight difference in that and 1,800. So you put 0.01 gold, you're wasting your time. 0.01 on the Dow, on the normal contract, not the micro, you're going to be overexposed unless it's about 7, 8K. That's another thing I want to talk about, what you're prepared to risk. When we do the straddle trade next Friday for the non-farm payrolls, I don't want people just about to explain the mechanics. So they ask, what volume should I do? I'm not being rude here. I'm going to be harsh. I hope not rude. I expect you to know that. Each individual got an account of different amounts. You've got to know what you're prepared to risk. Don't ask me. You should know that. Well, are you shopping on Saturday? What should I spend the shops, you ask me? I have no idea. What's your budget? Discuss that with your wife, not me. Same principle. So you get my point. So you know what you're prepared to risk. If you got 10 grand, some guys might have 600, 700, some might have 400 or 500. If you're prepared to risk 500 and it's 80 rand 0.01, like I'm 80 rand a micro as your risk, and they put in 1 micro. You want to risk 600 rand, you put in 1 micro. Why is that? You know, what's 80 to 600? All right, so 7/8 of 56. So 7. If you go 8 micros, you're going over your 600, so you're writing it down to 7. It's 0.07. I can't see why that should be an issue, but clearly it is. And all I can say is the maths that's taught at school is way below world par. I'm telling you right, way below. And it's damaging because you have to have it. It's not being hard. None of intelligence, none of personal things it's not being taught. There's a lot of guys, intelligent guys. An intelligent guy once said, do you think 50% a year is a good return on investment? He looked me completely blankly, had no idea. So I can't say you can make 20, 60, 80, 90, and this is a good or bad product if he doesn't have any yardstick of which to compare it with. You know what I mean? This is where the issues of the problem are. We cannot control the market, but that we can control. Okay, and it's important. Get a hold of it. Put the books down about fancy bloody Bill Williams indicators and learn this basis. You're far more good. And if you don't, and you come back and ask what Bill Williams, I'm going to answer you, I've forgotten. Don't even use it. I don't know anymore. After I haven't used it anyway, it's always good. Right, okay. Hope that wasn't too boring. I hope the guys who knew it be patient. I'm sure some guys now got some inkling. They're scared to ask, go and research it. Okay. Any other questions? Any trades, any on the shares, indices, anything else? This GBP, is it still giving us JIP? Probably. Yeah, we might clear up a little bit early today anyway. It's Friday. Oh, yes, do not forget. You have got Sage Economic. I posted just now on the chat line. Don't forget PC, core PCs coming out, expected 0.4%. New home sales, not as important as the PCE, but that's a personal consumption expenditure that can be inflation or lack of it. New home sales to a certain extent as well. Just remember that's coming out of +3, be aware of it. If it comes out drastically different, it can affect the dollar, affect share prices, indices and gold. Bear that in mind. Just bear that in mind. You should be protected on gold and Brent at the moment. Shouldn't have too much to worry about. Okay, Morris, have a look. What do you want to do with this? Oh, you want to short it? Sorry, read the bloody thing, Roger. Sorry, Morris. You want to short it. CAD used to be a heavyweight. It's more of a middleweight now. Euro used to be a lightweight, more of a middleweight now. It's a bit more evenly balanced. I'm not as confident. Now let's go back on the fundamentals. Let's go. That's my fundamental take. Let's go back through the technicals. This is yesterday. That's a day chart, right? It's had a 40 pip movement. Okay, is that good enough? Right? Went up, and it came down. Look at this one. Going up there. Is it going to hold? It's got some resistance there. So looking maybe to short it down. Before we go any further, before out, trying to break through there, but ignore the 50 in this case. A bit more resistance there or support. Anything on the hours? That seems to be holding. That looks like a good idea so far. What is the problem? Don't be boring here. Is the lack of follow through. This is today. This is 10 hours old, 10.5 hours old today. Came off 25 lousy little pips, not much. A few buyers came in. Yesterday it came off from that resistance, came off 40 pips, buyers came in. You get the idea. Do you think there's enough meat in the bones to make it worth your while? Even a range trade, even a scalping trade. Take it down here. How much is that? That's plenty. You've got enough. Expect to go there. Where you can put your stop there, you can't get the mass. So you're going to have to use a 4-hour or a stop around there. If you want to use this one to maybe put the stop there, make 30 pips or so. Don't go to the closing thread. The noise might. The pip, the stop grabbers might nail you. So don't get it closer than 30. Even looks good. Might actually zoom up, grab you, and go on down. So I take a vision on the short, stop up there, maybe down here somewhere. That's not going to work. You have to look at this to make it work. It hasn't been there 1, 2, 3, 4, 5, 6, 7, 8, 9, nearly 2 weeks to move a lousy. Sorry, get that right. Nearly 2 weeks to move a lousy 75 pips. It's like going to Bloemfontein to pick up this proverbial, this a hypothetical package of mine, when your car's governed to doing about 50 k's an hour, you get a bit bored and frustrated. Otherwise, I take your point. Just the lack of follow through, the lack of action is holding me back a bit. And I think the reason behind that is they're pretty even Stevens on a strength of currency basis. For that reason, personally, I probably wouldn't. But if you want to go for it, you guys, you know the score, try and grab, you go in reasonable size, maybe try and grab maybe 30, 40 pips. Good luck. I would advise it to my clients, put it that way, for those reasons. Any comments on what I've just said there?
Roger, I had a look at it, and I also did put the FIP at the lowest point up. And it seems that it's rejecting today at the 32 FIP.
Yeah. Okay, that's fair enough. But well, I don't mind 50 odd pips, I get that. But anything close to 30, remember your stops are in the market, it's not in computers, in the market. And you're risking stop grabbing by institutions getting your product. You suddenly get a spike up, probably a few stop losses there, spike up, grab it, come on down. Didn't in this case, but there's no really good example. But yeah, some of this movement here can be suddenly often stop grabbing. I'm not going to people who don't know that, ones who do know that, and it's quite not hiding anything. It's the big boys bullying the smaller guys, basically. Google it, it's quite open out there, so no secret. But don't be frightened, just be aware of everything. Fear is lack of knowledge. Once it's knowledgeable, then you control it. But yeah, bottom line is too close. Risk being stop being grabbed by the big players. Yeah. Because remember, they can see that. All the pros will have those in front. And a lot of guys do prop traders go on the back of big players, so they can see in front. There's the Nash, for instance. There's a guy with 100 we're talking big here, 100 contracts waiting to go in. They'll see it. So see that price there. They have what the depth of market price. You get it on there. Don't put it on that. Actually, get rid of the bloody thing. You have the depth of market price. In other words, the previous 5 prices, and you'll see a guy putting a little request order 100 there, maybe 50 there, maybe 20 there. They're going to wait till those guys pushes up there to get filled, and they'll go with their 1 or 2 contract size. This is a prop trade. They're not doing micros. You know what I mean? They'll grab it because that big one there should force it down. They hang on for maybe 8, 9, 10 pips, and then they're out. They do hundreds of trades a day. They just ride on the back of the big boys. They can do it because the prop traders, which means they've got virtually no costs. You can't. You've got the costs. Just making you not frightened of making oil. No, we're in here. I can't suddenly discuss all the rates here. We've got to trade out as a short. And I suddenly put a travel along. That's really going to backfire. I can't. Having said that, off the record, never mind what trader put on. That was yesterday, this today, this is now. Do I think it's so long? I'm still not that sure about that. I still think it's a range trading, doesn't know what it wants to do. We're on the 4 hour, it seems to be holding. It's trying to break through, it hasn't. I'm not confident along this. I'm still sticking with the scenario of a trade strategy. Am I getting fed up with it? That's 100% yes, I am. I'm disappointed, but I'm not confident enough to buy the pound, sell the Swiss franc. So no, I personally, even had a trade out, he asked me cold turkey now, no. I still, maybe I'm hanging on to faith here rather than franc, but I'm still hanging on. I might get a decent pullback. Having said that, Etienne, like I said earlier on, if he does pull back in a reasonable profit, I wouldn't blame you. Said, sod this, I'm out of here. Head and shoulders patterns occasionally, triangles occasionally, breaks the triangle. Yeah, head and shoulders can be quite useful. I don't like it on weeklies. Longest term, like head and shoulders daily. I do make reverse and head and shoulders, and the other one, right, it might be a sort of a head and shoulders here. Sometimes, yes, I do, but I put it slightly low in priority of where my fundamental knowledge is on the particular currencies, any fundamentals coming in, and whether it's the sell zone or not, and where my support resistance is. If that falls into play and it's there's no fundies coming out, it's in the sell area, say pretend it's down here, and a head and shoulders moving, that would be another tick to go for it. I wouldn't do it on that alone. In fact, most things, I don't like just one, give me the entry. I like it, at least a backup of 2, preferably 3. Now you get your confirmation, never candle saying I'm going in on an engulfing candle, bear or bullish. Alone, that's purely as a confirmation, not in its own. I want it to be, if I like to sell the pound against the Swiss franc, then one's weak in the other. It's in the sell zone, it's up at the support area down, it's starting to come off. I've got an confirmation candle. They might even have a fib or a trend line or somebody that gives an extra, if you've got 7 shoulders extra thrown in, no funded to stuff the system up as it's done the last couple of days, then that's enough for me. I don't give a can't comment about MACDs or anything like that. That's enough for me. We're looking for ABC on this. The all indicators will tell you after it's sold. The ABC. We're looking at ABC. ABC repeats itself. But difficult to explain it. I tried the whiteboard whether I hash of it. We can check it in the Google or whatever. GBP for a buy. I'm still nervous about this pound, despite that good funding that came out the other day. We'll have a look at it. Well, to me at the moment, my first glance is right in halfway house. Gone up there, it's tested a bit of resistance in halfway house, in the neutral area, not the buy or sell area. I'm still thinking the Japanese yen strengthened a little bit yesterday. Might have a bit of strength continue going forward. The pound, I think it's overcooked. I think it might be a weakness coming in. So no, I wouldn't be buying it. Where am I attacking if I did? Well, it's more than I thought. It was about 50, 60. Boys check. 100 pips up there. We're going to put the stop down here. 100 pip TP, stop down here. That's not going to work, number one. I might get it to work in the 4 hour, but definitely not on the daily. I'm leaning more, maybe a bit of a pullback actually. But if I sold it, we're going to aim at maybe stop up here, 75, and then I can aim down here, and I can get even down here, and I can get no risk reward. So personally, I think more likely downside on that one. But if you like the upside, you'd have to use a 4 hour to get it. So you wouldn't buy it, right? Yeah. So here, 4 hour, you put it down here, it's still too close to 66 pips. But this is only 2.5 hours old. If you put your stop there, 6.5 hours old. You get it. It's not below the daily range. 6.5 hours old before the price was there. Is it going to move up? That's 65. So you're looking about 100 pips. So you're going to have to aim up there. It's got to take this guy out. No. Simple as that. Long-winded way. I want to explain why there's some reason behind it. No. A lot of people like confluence, yeah, but FXS clogs up all the time. But no. That's my reason. I would stay aside this one. In fact, if anything, I might angle for maybe some downside here. If we can get some downside below here in the 4 hours, to go with it. Yeah, maybe on the 4 hour. What's the weekly say for itself? Yeah, that's backing up more of the shorts. The weekly's giving me a tick to go short on this. I actually, on the weekly, that looks like me at a short at the moment. And then if you go in now, and you put the daily as it sell up here, can't put it up there, it's too wide. Put it about there, 75 pip, and aim down to aim down here, and you get a one. I would say, to me personally, if you're going in now, more like. Sorry, Anthony. I'm looking for a downside number. And if you're looking for upside, you disagree, you can't get the mass. You can't get the risk reward. Not enough meat in the bones. Remember, try Joburg Bloemfontein for 500 rand payment. It's costing you more than the risk is higher than the return. That's my take. Anyone disagree? Anthony, if you can disagree, you might have a better plan. That's how we learn. My disagreement is actually funny, horrible though it is. That's how we actually do learn. Anyone disagree with that analysis of mine? Anyone think this could be a good buy on this one? Not good buy in goodbye, but a good long on this one. Any feedback? I want to get your little grey cells moving. If someone watched Poirot, get those little grey cells moving. I bet Gerard comes with it and finds it at Poirot. I bet the youngsters don't know what the hell I'm talking about. Yeah, but even without the week, you can see the long is you're not going to get the mass risk reward ends. Okay, happy, all happy on that. Okay, so we covered a few things today. Great stuff, thanks for that. Okay, a couple of few things. You got your economic, your yields, you got your what's the other on the DXY. Explain contract size and margin and the leverage and how you can get that. I didn't hear you say run it by again, so I'm hoping you do understand it, not because I'm too scared to admit I don't understand. Well, if you don't, you're too scared, it comes and if you financially don't blame me, but I think we covered that, it's important. You know how to go to specifications, that's the other one, yeah. Don't forget your charts, save them. I think most of you know this already. Right click on the blank part of your chart screen, templates, save the template, don't forget. And then you put your name in or whatever you want to put in there and save it. Click on save clearly. So if you do lose your charts, just go to templates, pick the chart you like, click on it, and you're back up and running. Just do it once for to make sure exactly what I'm talking about. You make a wrong, I've happened to be quite press the wrong button, I don't know, fact thing, this comes up. All you got to do then, you right click and you go to templates, click on the one you like, got a few there, and back it running. If you want to change your charts, right click, go to properties and change it to the colors or whatever that you want to do, and then okay, and then save it. So you might want to have 2 or 3 white background chart, black background chart, one with your 100 on, one without the 100 on, one with the MACD on, whatever. You can have a few saved to refer to if you want. Cover most of those. You've all got the calculator. If you haven't, get it. Do not trade when you don't know what your volumes are. I don't want to come up a guy asks assistance and he's open trades where the position size are all up to maggots. You've got 8 grand, or make it 5 grand in your account, and you're 2 grand down, no stop loss in one instrument, horrendously overexposed, and obviously getting demoralized. Get your risk calculator out, so when you go in, get off a live chat, don't forget tech supports, and you go in, you know before you've entered and press the go button what you're prepared to risk. So you're prepared to risk to 500, you can't complain if you lose 1,000 because you modified your stop loss away from entry to try, because you don't want to get stopped out, so you're increasing your risk. Okay, hope that's all clear, very important. Clear those up, and then all you've got to tend with the machinations, the emotions of the market. If you don't, then you've got to tend to the market carry on your own. And there's nothing more frustrating, sorry, Anna-Marie, and getting kicked out of something because you put the stop incorrect or you didn't check it. Or it went beautifully, the trade was a fabulous one, and you went into small after you knocked out another one because you went in too big. So you lost the one too big, and the one that hit TP, you're too small. That's not the way to go. Be consistent, understand the basics behind it, get your volumes right. Okay. Very, 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 very important. Okay, all good. Any questions? Anything you want to run by again? Got a few minutes left. I'm going to trade out. Keep an eye on your others. If you want something on a knowledgeable front, you can find income, that's fine. Some of the newer guys, just trying to get the sort of basics understood. Not sure, please ask. And that little trigger can make all the difference. Yeah, BA's given us some stick to a lot of guys, but maybe it's time to come back this thing. Can't see it going up forever, anyway, so. Why do I keep doing that? Just in case you don't know, some of the information comes through and I'm on incorrect data. So just pick the floor out daily to make sure all the information's through. It happened to me about a few months ago, and I was doing the weekly analysis. And I do it all over again because I forgot to check and the information is incorrect. I hadn't fed through as yet. So I'm doing that. Right. It's in the buy zone clearly, absolutely clear in the buy zone. Will I buy it? No, I think this thing is going to start pulling back at some stage. I'm not quite sure, like the GBP yet. Maybe I'm in denial why it's holding up so long. I know quite a while back some good news came out, but I'm not sure why it's still being sustained. I think that's going to start breaking down soon. So I'm not buying it too high, and I want a confirmation before I sell it. I'm not keen on this one.
Roger, overall, all the stocks jumped positive last night, around about 9:30. And I don't know why, but I got a feeling that with the fundis coming out today, that it's going to jump again, and from there on, it will start retracking.
Yeah, I'll be honest with you, I haven't got any more update than that. Where it came off quite nice, but there's no extra information or fundies coming in at that specific time to actually push it below. Let's say we'll take the NAS as an example, round figure. So I think a lot of guys, a lot of prop traders out there, big traders like I mentioned, proprietary traders, prop traders, would have what we call squared their books before the close, and almost certainly been in shorts. So what they do is they're just closing out and have a look at the next day. By closing out those shorts, clearly had to buy no exit, and that's why they had a bit of a jump recovery, and I think it reflected some of those shares. For sure, yeah, it's recorded on there. Yeah, absolutely. I hope you all know that, guys. If you can't make the trade run because you're in a meeting or something, it's posted on the portal. Scroll down to social media on the menu, and there you'll see YouTube. And I even put the time, like 4 o'clock, 23rd, 02:22, or 9:30, 24th, 02:23, sorry, whatever it is. And there it is, yeah. I hate to say it. The good thing about doing there is you could start fast forwarding when I start to waffle. So God, it's waffling a bit, you start fast forwarding. But yeah, to answer your question. Okay, anything else? I'll wrap it up. Remember, I'll be in transit the office. We've got some internet there. Yeah, get on it because I'm going to take the other phone and just for WhatsApp calls or whatever. But so I can do, I'll make a couple of calls. I tell you why I'm getting actually not too excited. Getting to just to say hi to the guys. We're living in a virtual world, and I'm living and working from home. And I forget there's real people out there, not faces on Zoom. So just sort of interact like a real person instead of a Zoom image. I feel I'm living in the clouds somewhere. Okay, I didn't know that, Pietro. I know they did some deal a while back, which gave us jip. Well, we gave you a good friend jip as well. And it jumped up and we should have been short. But that's another story. But yeah, it might. I haven't followed it. Remember, I had to reload it. I've taken it off. I haven't followed it. We've got enough fish to fry. Now we've got micros to the indexes, even with a limited amount of money. That's what the micros for. And then we can do all the all the forex. We can do the commodities. And we've got other shares which you can do. Haven't bothered with it, basically. Forgotten about it. Like NVIDIA, forgot about it. Learned a bit myself there. Thank you. It's just nice to know behind what you're doing. I mean, you can put anything out there and I glue that chart in a second read it. It's just practice. But it's nice to know what's behind it. I'm in IMP, by the way. Oh, I'm doing well. Oh, great. Yeah. And then the guy says, what's IMP? What? I don't know. Sounds a bit unprofessional. Yeah. Good, good. Okay, any other questions? Finally, anybody else out there? Are we all good with the maths behind it? We'll clear it. If you're not sure, we'll go through it again. But please, those things you need to know. Don't think you're going to make good money on this if you don't know those basics. We'll come back and take your money. Remember, always remember, it's a zero-sum game. Money's not conjured out of nothing. We're not the Fed. We're not just prints money out of nothing. So every time you lose a round, someone else has made it. Who's the likely winner of that? The guy who's taken the trouble to learn a bit more than the guy who doesn't. So if you're a complete novice and you haven't taken much trouble and you're going in a winging a prayer and being highly positive and praying it and the rest of it, well, whether you're praying who's going to help you with it, it's more likely you're going to pay the other person. So get to know your stuff, interact, and well, hope you get there. But always remember, you're going to get occasions like yesterday when you get a fundie complete out of the blue, knocks you, or the other way around. Suddenly you make a quick buck very, very quickly and you think this is easy. Now that got lucky or unlucky as last time. Yeah, fair idea. Purchasing, I've got to keep still it. Composite expenditure, PCE, there you are. That is, it could be considered inflationary. Remember I mentioned the beige book, where they're not that, Powell gets something called a beige book. He's not speaking to her about it, I'm just saying. That's part of the beige book that you'd be informed about. Like new home sales to a lesser extent, CPI, PPI, PCE, those sort of things, GDP, those sort of things. They look as economic indicators. Whether in his speech he says we might not have to involve interest rates or decrease money supply or increase it. Those indicators goes for his areas of what he's going to say economically going forward. So yeah, it's exactly the same. It might jump around a little bit in confusion, but it's a bit different. It will affect gold. The amount, I cannot tell. No idea. It's what the emotional reaction will be at the slightest point. It can confound you or be a disappointing, but it will affect gold, the shares, and the indices. Yeah, and the dollar. Okay. Okay, guys, but you should have your GBPs, thing or whatever, on the Swiss franc, leave it alone. But your Brent and your gold, you should have been covered with protection anyway on your SL modified, so it should be a trend smack. At least you're protected, so you shouldn't have to worry too much. But going to the weekend as well, make sure if you get into something, if you're scalping, just be careful going to the weekend. Okay. Right. Okay. Great, guys. Catch you Monday morning. Have a great one. So I just waiting for you to come in there. We're just closing up now. We've run out of stuff to do. Say, just mention everyone have a great one. Sorry, got kicked